All right, greetings, everybody. Thanks for tuning in. Feels like a Friday night, but it's actually a Wednesday because tomorrow is a holiday. But anyway, let's take a look at what is going on in the market because the same thing is continuing. The market's getting more and more narrow, just being led by. I think I saw today that there are 10 companies in the S&P 500. Obviously, the ones we all know: NVDA, Apple, whatever, Microsoft. If it wasn't for those 10 particular stocks, the broader market would be going lower. Okay. Now let's look at the S&P 500 makeup here before we look at the markets. So this is the S&P 500 ETF. So look at these top 10 names. Well, I'm not going to do all 10, but let's just look at the 5. Microsoft 7.4, Apple is 6.9. So what is that, like 13 and change? You got NVIDIA 6.5. You got Amazon is 3.9. You got Google, whatever, blah, blah, blah. So you get this like handful of stocks that dominate the S&P 500. Remember, this is 500 different stocks. So the narrowness is continuing. Now you might be saying, well, big deal, Mark, whatever. I'm invested in the narrowness. Hey, man, good for you. Making money. That's great. I would just say, ride the wave, but just be ready for a quick turnaround because a lot of the things in the market are deteriorating. For example, let's look at the S&P 500 equal weighted ETF where every stock has the same weighting. All right. So in this particular ETF, NVIDIA is no more important than whatever, the 490th largest stock is. And look at this. Most stocks are going down. If we look at the S&P 500, the S&P 500 is going up, even though most of the stocks within the S&P 500 are going down. How does this happen? It's because the market capitalization that we just talked about. You get a handful of stocks dominate this index. In theory, you could have 480 stocks going down, 10 not moving, and 10 moving higher. And this benchmark will move higher, or the S&P 500 will move higher. But it kind of masks the underlying weakness, which is what we got to be on our toes for, because we're going to get a big reversal, and it's coming soon. I don't know exactly when. Maybe it's tomorrow. Well, it won't be tomorrow because it's 4th of July. And it won't be Friday because everyone's going to be away. Maybe next week, maybe 2 weeks, maybe a month. All right. Anyway, let's go see why the market was really strong today. A lot of this is tech right here. All right. I've been saying as long as Microsoft and Apple hold up, the broader market should be fine in terms of what we just talked about. I know that's kind of counterintuitive. Most of the broader market is actually going in. What I should have said is as long as Microsoft and Apple are going up, the S&P 500 will be fine. But when these guys reverse, then we're going to get a lot of acceleration to the downside. And it's not something that as traders we should fear. I think it's easier to make money on the downside than on the upside because markets go down faster than they go up. Pretty simple. People sell because of fear and they buy because of hope. Fear is more powerful than hope. Apple doing really well here. NVIDIA. Big day here. I wouldn't be too confident, though. Looks kind of like a short covering rally here. I mean, the stock has been pretty weak. It's hitting some short-term resistance here. I don't think I would be a buyer of NVIDIA here for the short term. I mean, if you want to loan it for the long term, that's fine. I'm talking to the trader community. All right, let's look at the healthcare sector because that looked like it was breaking down. Wow, look at that. Whew. All right. Now, I know a lot of our students took some short positions here in the healthcare sector because this morning we talked about how weak it was. Notice the action on this particular day here, right? These candlesticks, if you know what they mean, they can really give you insight into the action. So the top of the rectangle is the opening price. The top of the wick is the high price. The bottom of the rectangle is the closing price. So think about what happened. It looked like the Bulls were going to power this ahead. Let's look at the football analogy. The Bulls ran it down and they got to the goal line, but all of a sudden the red team, the Bears, they made a stand and they turned it all the way back and the momentum started to go the other way. Yesterday was kind of a quiet day, but it did break support. Today was a bloodbath. Wow, look at that. Damn. All right, let's see what else we got going on. The industrial sector, kind of holding support. Definitely trending lower, though. Nothing to write home about there. Financials, a nice rebound, but kind of going sideways. So, tech is holding us up, but there's some other things that are really kind of weak. Now, here is the consumer's discretionary sector, but you got to remember this is dominated by Amazon and Tesla. And Tesla's run is about to reverse, if you ask me. Very overbought, getting close to a level that was resistance before. There's tends to be resistance at former peaks. You can see that right here. Peak gets back to it, resistance. So if we get back there again, I think this is going to be a pretty darn nice idea on the short side here, actually. Because this is just ridiculous, man. This is like your FOMO, or as we used to call it, the FUMO. Because FUMO means like you're smoking weed in Spanish, I think. Or not, or it's Italian, right? But anyway, man, I got this on the screen for a reversal here, Tesla. All right, what else is important to look at? Let's just take a quick look at the bond market. Kind of been melting down. A little bit of a rebound. Some real weak action here, though, this past week. All right, so what else can we look at here? So we got Microsoft, we got Apple. Again, I think I just want to reemphasize what's going on here. Most stocks in the market are going down, and that can be reflected in our equal weighted ETF here. All right, it's important to understand this if you're a trader. In this ETF, every one of the 500 stocks has the same weighting. Most of them are going down. In this ETF, the standard one, I guess you could call it, the bigger the stock, the larger the market cap, the more weighting they have. So this is a sign that most stocks are going down, but the big behemoths, the trillion-dollar companies, are moving the market ahead. And this is the type of action that you get at tops of markets. The same thing happened at the end of 21. Most stocks started going down in November. The big guys didn't peak until very late December, early January. All right, everyone, I hope that helps. If we do start to reverse, we'll talk about some inverse ETFs that go up if the market goes down.